Good afternoon. Let's do some business. We are doing it live and doing more at 4 weekday afternoons. We get right down to business with the news-driven hour right after Ben Shapiro and just before the 790 KBC News Blitz with Randy Wang at 5. Mottek On Money, live on the air on 790 KBC, streaming live online worldwide at kbc.com. And your on-demand Mottek On Money podcast, kbc.com, Apple, iTunes, and all your favorite podcast platforms. Stocks finishing mostly higher today ahead of a big decision coming up tomorrow. Investors gearing up for the Fed's first interest rate cut since 2020. The first cut in 4 years expected tomorrow once the Fed wraps up a two-day policy-setting meeting at 11 o'clock tomorrow morning. That's when the announcement will be made, Los Angeles time, 11 a.m. We'll get the decision on interest rates, a statement on the economy, then a full-blown news conference tomorrow from Fed Chairman Jerome Powell. The Dow coming back, pulling back today from a record high hit yesterday to kick off the new week. We did slip 16 points from that record high today, leaving the Dow back to 41,606, snapping a four-day winning streak. The S&P 500 eked out a gain of 1 point, briefly touching its previous all-time closing high, by the way, early on. And the Nasdaq moved higher today by 36 points. Small cap stocks have been in the spotlight lately, staging an epic rally, as a matter of fact, over the past month, with the Fed set to cut interest rates for the first time since 2020. Yields on government debt ending higher today after the August retail sales report out today came in better than expected. The yield on the 10-year note at 3.64%. That is the second lowest we've seen so far this year, and that's the number that impacts the fixed-rate mortgage rates out there, which have come down. Retail sales, by the way, up 0.1% in August. Economists were expecting a 0.2% decrease in spending, according to Bloomberg today. Meanwhile, retail sales in July were revised to a 1.1% increase from a previous reading that showed a 1% increase in the month. Sitting around in cash and cash-like investments about to get less attractive as the Fed gets set to lower benchmark interest rates. The fear gauge, by the way, did edge up a bit today, adding to its rise this week ahead of the Fed's decision on interest rates. Crude oil futures did rise today by $1 a barrel as supply disruptions increased, and traders bet that demand will grow if the Fed lowers borrowing costs this week, as is widely expected. Both contracts settling at their highest so far this month, with crude oil futures up $1.10 to $71.41 in New York. Brent crude futures moved up nearly $1 to settle at $73.70 a barrel. More than 12% of crude oil output, by the way, from the Gulf of Mexico is offline after Hurricane Francine blew through the Gulf of Mexico last week, lifting oil prices in 4 of the last 5 trading sessions. Prices also rising in the face of the renewed tensions in the Middle East. Militant group Hezbollah promising to retaliate against Israel now after pagers detonated across Lebanon today, killing at least 8 people and wounding nearly 3,000 others, who included fighters and Iran's envoy to Beirut. Israel declining to comment on the detonations. The pagers that exploded today in Lebanon and Syria were apparently acquired by Hezbollah after the terror group's leader ordered members earlier this year to stop using cell phones, warning that they could be tracked by Israeli intelligence. A Hezbollah official telling the Associated Press the pagers were a new brand, but declines to say how long they had been in use. The Hezbollah official spoke on condition of anonymity because he was not authorized to talk to the press. According to the AP report, experts have said the pager explosions point to a sophisticated, long-planned operation possibly carried out by infiltrating the supply chain and rigging the pagers with explosives before they were imported to Lebanon. Several reports have indicated that this is the case. Around 500 members of the Hezbollah terror group have lost their eyesight following today's massive attack that caused the pagers to explode throughout Lebanon and in Syria, according to a Saudi television report. At least 6 Hezbollah operatives were also reported killed in IDF strikes in southern Lebanon today, according to the Times of Israel. Airlines have started to cancel flights to Israel, apparently anticipating a potential Hezbollah reprisal after thousands were injured in that series of pager blasts throughout Lebanon and Syria. Meanwhile, tensions have flared in the South China Sea, where Chinese naval forces have rammed a Philippine ship with a 60 Minutes crew on board. I'll discuss that with China expert Gordon Chang, author of The Coming Collapse of China and the Great U.S.-China Tech War. Rancho Palos Verdes, closer to home, getting international attention this past week when former President Trump appeared at his famous cliffside golf course on the ocean and laid it on thick when it comes to policies here in California. He blasted California as a hellscape that Vice President Harris would inflict on the rest of the nation should she win the White House. The Trump National Golf Course, by the way, is less than a mile away from the active landslide plain in that area where residents have had their utilities shut off and evacuation warnings have been in place due to the threat of more damaging land movement. I'll discuss all that with the mayor of Rancho Palos Verdes, the Honorable John Cruikshank, will be joining me live later this hour. But first, on your money, the markets, the economy, the Fed, and the whole works. Joining us live now, investment expert Jim Hausberg, managing director at Hightower Advisors, the Hausberg Group in Beverly Hills. Jim, thank you very much for coming to the line here on the eve of a very big announcement tomorrow. Give us your assessment of things here at the moment.
Well, I'll be direct, Frank, 50 basis points. That's what I think the Fed's going to do. When the Fed starts to cut rates, Frank, they don't do it once. They do it several times. And right now, the Fed funds in this 5.25, 5.5 range is going to come down. It's come down because the economy is slowing, but we don't feel there's a recession. It's come down because the rate of inflation has come down. And a lot of the data that's been coming out recently, will continue to point that way. Others are saying 25. It could be viewed negatively if it comes into 25 since the talk lately has been 50, but that's just a short-term thing. They want to get Fed funds down at 3.5 range. That's neutral. That's meaning a point where the government is not looking to stimulate the economy by lowering rates, and they're not looking to slow it down by raising. So if we're at 5.25, 5.5, you do the math to get to 3.25, 3.5. That's 200 basis points. And if they do 50 now and 50 at the end of the year, then you're at 100. So they don't want the economy to go into recession. They don't want to be behind. Some might argue they are. That's why I think they go big with 50 tomorrow.
On there live with Jim Hausberg, there's been a lot of discussion that if it is 50, that might actually spook the markets, getting people to think, well, gee, are things that bad? Do they need to be that dramatic? But it looks like the stock market, meanwhile, which has been at or near record highs, may be anticipating exactly what you just said. So how do you take how do you take that in?
Yeah, I think the market is expecting 50, and that's why I said if it comes in at 25, you could see the market sell off for a period of time, short term. But if it does come in at 25, you just won't have me on next week because I was wrong. But I'll come back anyway. But that's where I see it, Frank. Look, you want to get to that neutral point, and that's what I was emphasizing. That's 200 basis points from where we are now. I don't think you want to lower 8 times at a quarter to get there. I think they'd rather do it over 3 or 4 months, personally. But we'll see where things go. But they want to get it in line, and right now it's pretty high. It's starting to help certain industries. When you look at the market and the sectors, lower rates really help the housing market. You're starting to see housing stocks perform better. Sherwin-Williams, the stock we own, the paint group, starting to do better. Industrials starting to do better. Banks doing better. People are going to be able to afford mortgages, Frank, that maybe they couldn't have afforded, 6 months ago, 9 months ago. So I think that's really why we're going to see rates down. It's going to be helpful for housing. It's other sectors, I think everybody benefits from lower rates, so I don't want to just pinpoint a few. But we're also seeing a pretty good rally in markets because energy prices are way down. You go to the pump and you look at what you're paying today, even though it's always a lot in Southern California, it's come down quite a bit. We were paying $6.50, $7. We're now $4.50. Other parts of the country are back in the $2s. So I think that's really been one of the drivers for slower inflation has been the price of oil. And the fact that China is still in slowdown mode has helped. And that's another reason why I think oil prices are where they are. And we're all surprised with what's going on in the Middle East, that oil prices haven't popped on that fear index of, a full-blown war there, which obviously we hope doesn't happen. So that's where we are on the oil front. And, markets are healthy. Portfolios of stocks and bonds, 50-50, up in the 9% range. We'll take that all day long. S&P still up 18 or 19 again, 35% coming from the big, magnificent 7. But we are starting to see it spread out, and markets look pretty good.
On there live with Jim Hausberg, and if the Fed does move lower by either a quarter percent or a 0.5%, that would impact the Fed funds rate. That's the benchmark rate, which in turn would impact the prime lending rate. That's the bank rate that banks charge their best customers, which right now is at 8.5%. So maybe it'll be down to 8.25% or 8%. That would certainly be significant. The bank stocks, by the way, have been rallying lately. Would you be touching any of those here now?
Yeah, the bank stocks are doing well, and they're also making a statement that they want people back in the office. By the way, J.P. Morgan wants everybody in 5 days a week. Goldman Sachs 5 days a week, and today Amazon announced they want everybody in 5 days a week. Right. So we'll see how that plays out. But the banks do well if rates come down. Obviously, they're paying depositors a certain rate, and they're lending it out at a higher rate. When you get that inverted curve that they had, it doesn't work very well for them because they're borrowing money at a higher rate and lending out at a lower one. So we're starting to see these things move in advance of the rate cut. That's why I say markets might disappoint if we don't get a big enough cut. But, if you get 25 now and 25 in November, you're at 50. If you get 50 now, we'll see where it takes us in November. And then, of course, we have the election, which is, just creates a lot of uncertainty around markets. Certain industries may do better if the Democrats win or control the House, and vice versa if the Republicans win. But rest assured that volatility will continue at least, through the election, and we'll see where it takes us after.
Right. The VIX index, the volatility index, the so-called Wall Street fear index, moved up 3% today, and we've seen pretty wide moves in that index lately. Would you be betting on volatility here or any of these volatility instruments that are out there given the current environment?
Well, you want to buy stocks when the VIX goes way up. That's really when the fear is at its highest point. That's why you can go back to August, I think 5th. That VIX got up to like 65 or so. And you've seen the rally in markets since then. So, if we get the 25 cut, not 50, you might see the VIX move up and people fearful that or betting on a lower rate than the 25. So that could pick up the VIX. I just don't see, like others do, that if they go 50, they're really worried about the economy. I just don't buy it. I just think with where inflation is and where the economy is, that the Fed knows what they're doing. They've managed this very well for a long period of time through the pandemic, bringing rates down to zero and keeping us from really going over a cliff. And by raising as they did, maybe a little behind because of the higher inflation. Remember, we got up to 9% inflation. We're now in this 2.5, 3 range. But again, people are concerned. They're still paying a lot more for certain things, certain items in the supermarkets. Insurance, we've been talking about a bunch. Automobile insurance, very high. Homeowners insurance, very high. That stuff has to be worked out. It's gotten to a point where it's very, very difficult to buy a new home, pay for the insurance. And just driving your car around Southern California, what's happened really, Frank, is that the insurance companies are paying so much more to fix cars. The labor costs are up, and the parts are way up. So that's why you're paying more to get your.
And the crime is way up too. Let's not forget that.
And the crime is too. Yeah, no, definitely another concern. And obviously, we live in a beautiful place, but fire is an issue, and that's a big problem sometimes for homeowners insurance. So we'll see. The ground just has to stop moving, Frank.
Yeah, we'll be talking to the mayor of that area coming up here soon. We'll get a right there frontline update. Now, the dollar has pulled back ahead of the Fed decision tomorrow, and it's widely expected that the dollar will take another hit. And, of course, the markets cheer that. The Dow's been hitting record highs this week, and when the dollar goes down, that makes our stuff less expensive overseas. So the big international companies benefit from that, right? So in all this, we've seen gold hit a record high this week, above 2,600. Yep. Right now, it's just below that. So what do you see ahead for gold and for the dollar?
No, the trend is up in gold. So I would, if you want to play momentum, you buy that. Maybe you buy it on weakness. People say it's going to 3,000. We don't own it. We don't trade it. We've missed it. But we've got a lot of other things, so I think that's good. The dollar will weaken if rates come down, and it already has. So that will probably continue. Products will be cheaper overseas. It costs a little bit more money for us to travel. But that whole currency commodity thing is constantly changing. So I'm not overly concerned with that. And I did want to point out one thing on the inflation front was even though the numbers are way down, as we discussed, they're still up from 2020. So, labor costs are higher. They're not going down, which I personally think is a good thing. The minimum wage is higher. It's not going down just if the economy slows. You don't see that.
Right.
The price of, various, items in the supermarket, they're not going back to where they were. But they have come down, and we think they will. So
it's the rate of
just be on the
inflation that's
lookout
come
for
down,
that.
but the prices certainly haven't come down. And after
Correct.
that big run up, that's right. So silver now
That's
at
a good
31 and
example.
change, up 10 cents today.
Yep.
Gold pulling it up here now at 450, $2,596.90 an ounce. From analog gold to digital gold, the cryptos here. We talked to the biggest fans as well as the harshest critics, and last time I checked, I don't think you have the laser eyes on here, Jim, but you do follow what's going on with cryptos.
Yeah.
Bitcoin right now back above 60K. What are
It's up
your
4%
thoughts about
today.
what's happening there? There you go.
I think it's a great trading vehicle if you have the stomach for it. I can't figure out why it would go way up from here. Obviously, the more it's used, that's what people say, the more valuable it becomes. So there's more transactions using Bitcoin. I think that's what's behind it. But there's all these funds now that are offering it. I just don't know how you value it, Frank. I've said that from the beginning. So I'm not a bear on it. I think the momentum is certainly on the up, but it's just very hard to figure out a valuation.
Yeah.
But stocks and bonds are easier to figure out. And by the way, on the stock question, because I know you ask me this all the time, what are we buying? I've been saying for a long time, you want to buy these companies that are increasing their dividends at nice rates at nice rates. So Microsoft today announced this morning a 10.5% increase in their dividend. Again, it's not a high dividend paying stock, but they're paying out, about 87 cents a share, whatever it is, comes to, or quarterly. And that's a big increase. And I think companies that continue to do that are the highest quality companies. Those are the ones that you want to own. They're paying out dividends to shareholders at a nice increase. And they're also reinvesting in their business. And those are the companies that act best when you go through bear markets. They may not be the hottest stocks in the up days, but they're certainly the most solid ones. And that's why we like high quality companies that are increasing their dividends, not necessarily high dividend payers, but dividend growers.
Well, certainly Microsoft has impressed on the upside. Hard to believe, 435 and change today, up nearly $4, and one of the Magnificent Seven. What about the Magnificent One, NVIDIA, which of course still is a big subject at we used to say water cooler. I guess we can say cocktail party conversation. Down $1 today, $1 and change to 115 and change. IBM, which has been hitting record highs, pulling back 3 today to 214. What are your thoughts on these names?
Well, some of these old tech names are doing pretty well. IBM's done well, and Oracle's been hot. Big play in software and AI. And
yeah.
It's been
Larry Ellison, now the second wealthiest guy in the world, overtaking Jeff Bezos on that big rise. You're right.
I don't think Bezos is losing sleep over that, but you're probably right based on those numbers. But I think NVIDIA is a great story. I don't think it is. I know it is. But again, when something goes 10x over a year and a half, it's going to pause at some point. Continue to buy that stock on weakness. They're in the right spot, and it's so much money going into AI through infrastructure funds, and these digital centers or data centers are picking up. And I think Blackstone and Microsoft announced a deal today, if I'm not mistaken, to build more of these things. So keep an eye on data centers. They're good plays. There's a real estate component to them, but I guess, at the end of the day, tech is really where the growth comes from. There's a lot of other industries that are doing well, but nothing's going to grow like tech. And even with somewhat, of an underperformance, so to speak, in the last quarter or so, tech is up 25% year to date. So it's always, It seems to be the number one area.
All right, and let me now officially ask you that big question. Any other specific places where you are putting money now and/or taking it off the table?
Yeah, I'm sorry that I jumped ahead on the questions, but I'll just stay with, as far as taking off the table, some of these things that have, gotten ahead of themselves, we sometimes tend to lighten up and add to things that have underperformed. So I continue along those lines. But again, most attracted to dividend growers. That's where I think people should always add money because they're not necessarily, again, the hottest stocks. They're not part of the Mag 7, although Microsoft falls into that. Let's watch and see if Meta starts to increase their dividend as well. So I think those are attractive areas. If you want to really go like out there, Frank, and stretch it, You could buy K-Web, which is the internet companies in China. I haven't read a good article about China in a long time. The fund is trading at about 25, 26 a share, down from 90 a few years ago, and it owns all the Chinese internet names. And starting to act a little better, but can't find a lot of bulls out there on that topic.
All right, Jim. Well, thanks very much for coming to the line this afternoon. That is investment expert Jim Hausberg, Managing Director at Hightower Advisors, the Hausberg Group in Beverly Hills. We'll be tuning in tomorrow for the big news, Jim, and we'll hopefully get your reaction very, very soon. Thank you very much for joining us live here this afternoon.
Thanks for having me, Frank. Drive safe, everybody.
Thanks a million. Thank you very, very much. And let's check that billionaires list, by the way. Elon Musk, of course, still number one at $251.5 billion. His net worth went up $614 million today. Jeff Bezos in at number two at $204.8 billion, up $1.8 billion today. And Larry Ellison has moved to number three, pulling back $3 billion today at $203.5 billion. Mark Zuckerberg, the Facebook guy, at 185.7. He was up $1 billion on the day. Now let's get out there and check your ride this afternoon here on 790 KABC. Mottek On Money continues here, 790 KABC. Good afternoon. Mixed finish for stocks today ahead of the big Fed decision on interest rates. It's widely expected the Federal Reserve will be lowering benchmark interest rates for the first time in 4 years tomorrow when their meeting wraps up at 11 o'clock tomorrow morning. We'll get a statement on the economy, a decision on interest rates, and then a half an hour later, the Fed chairman's news conference. The Dow coming in for a closing loss today of 16 points, coming off the record high, which we achieved yesterday to kick off the new week. We're back to 41,606. The S&P 500 gained a point at 5,634. The NASDAQ up 36, 17,628. The yield in the 10-year note, 3.62%. That's the second lowest so far this year. That's the one that impacts the fixed-rate mortgage rates. Gold at $4.50 right now, cracking below $2,600 during the trading day at $2,596.90 an ounce at the moment. We see silver at $31.08, up 10 cents here at the moment. The VIX index, the volatility index, moving up 3%. Bitcoin up about 300 now, back to 60,248. Ethereum down 3 at 2,342. And Doge at 10 cents. And now the latest news here in 790 KABC. Mottek On Money continues here in 790 KABC. Good afternoon. Rancho Palos Verdes in the South Bay here in the Los Angeles area, getting international attention recently. Former President Trump appeared at his famous cliffside golf course on the ocean and laid it on thick when it comes to policies here in California. By the way, he said his golf course there is very solid despite the nearby landslide. He blasted California as a hellscape that Vice President Harris would inflict on the rest of the nation should she win the White House. He spoke at the Trump National Golf Course located in the South Bay city of Rancho Palos Verdes, the course less than a mile away from an active landslide plain where residents have had their utilities shut off recently, and evacuation warnings have been in place due to the threat of more damaging land movement, something President Trump talked about. And joining us live now is the Honorable John Cruikshank, the Rancho Palos Verdes mayor. John Cruikshank. Mayor, thank you very much for coming to the line this afternoon. It's been quite a whirlwind there in Rancho Palos Verdes.
Yeah, it certainly has, Frank. Thanks for having me today.
Yep. Tell us about your visit with President Trump there and his message, and give us an update on the situation there.
Sure. Well, as you know, he held a press conference on Friday, and I think because his golf course is roughly within a mile of where the landslide activity is going, they wanted to make sure that he was at least knowledgeable enough to answer some press questions during that press conference. So I had prepared just to go visit with him, talk to him briefly, tell him what was going on, answer any questions, and that was going to be it. But we spoke for about 20 minutes. He asked me all the right questions about, can the problem be solved? What does the city need? What's going on? And then after he had conducted an interview with Trace Gallagher from Fox News, he came down from that and he said, John, do you want to join me at the press conference? I'm like, okay. I wasn't expecting that. And as you know, I was afforded about a 3-minute time period to introduce myself and to let the world know about what's going on in our city and our plea for help.
That is really something. So the global spotlight was put on Rancho Palos Verdes, and the Honorable John Cruikshank, the mayor, right there in the spotlight with former President Trump. And President Trump appealing for government help there, right? As you have been appealing, given the situation there, given this dramatic land movement. Are you getting the help you need? And do you think if President Trump becomes a president again, will you get some help there?
Well, right now we are not yet getting the help we need. The problem financially is bigger than our city coffers can allow. We do still need the help of FEMA and the Corps of Engineers and several other departments within the federal government, along with financial assistance. And I do believe that the former president, if he were to be reelected, would provide us the help that we need, because he understands that the problem is bigger than a city government can handle, and it's not just a city problem; it's a regional problem that needs to be addressed, and help from the city. The federal government is what's required.
Right. So at this point, the state, correct me if I'm wrong here, has declared a state of emergency in that area. Are you getting some help from Sacramento at least?
Well, the governor's state of emergency that he declared, although we appreciate that, was very nuanced, really limited the amount of help that we're getting. I don't believe we're going to be getting any type of financial help from the state government. And the way that he nuanced it, it actually precludes really getting any help from the federal government as well. So, once again, all sounds good until you read the fine print. And we find out that really we're still seemingly left alone at this point.
On the air live with the mayor of Rancho Palos Verdes, the Honorable John Cruikshank, discussing President Trump's visit to the city, as well as the current landslide situation there. What about the Trump property? Is it indeed on solid ground at this point?
Well, his property is well outside the landslide area, so his property is fine. He did talk about when he did purchase his golf course there, he did have some issues with, I think, the 18th hole that had to be rebuilt. He had to spend quite a bit of money to rebuild it, but his property is not within this landslide complex, but it's close enough where you could see it from the golf course, the landslide area, and he's a partner of our cities. He's one of our many businesses, and I think he understands the importance of fixing this problem and not just allowing the city to go without help at this point, because there's many residents out there that are struggling and suffering, and we need to help them.
What is the utility situation? We had you on the air recently ahead of some very, very important decisions there. Are people getting the power and other utilities that are required to live in those places now?
Well, I think most of our residents are still on their own. They're out buying generators, which run off of propane and diesel and other products that we probably don't want running out there full time. So the residents are still on their own. We have tried to appeal to Southern California Edison as our energy provider to be the ones to provide off-grid technologies. We still believe that Edison will be that partner for us, but right now we're still working to make that happen, and we're going to continue to push for that until our residents can get the electrical power that they need to live in their homes comfortably again.
All right. In the meantime, the Earth continues to move. We've actually had earthquakes recently. Have you felt them there, and how has that impacted the situation there?
Yeah, no, we certainly have felt the earthquakes that have happened. Certainly the one that was located in Malibu was felt in our city. We do monitor the movement of the landslide complex, but it's a kind of every other week. So I couldn't tell you how much it aggravated at the time of the earthquake, but I think when we get the next readings, we'll be able to see if there's any type of major movement that's happened in any of those areas. And certainly it doesn't help when you have earthquake activity along with the landslide activity.
Mayor, thank you very much for the update, and congratulations on your big week there. Despite the tremendous challenges the city faces, we wish you all the best, and the spotlight was placed on Rancho Palos Verdes, a magnificent city in the South Bay there, overlooking, of course, the Pacific Ocean, with Catalina Island visible from that beautiful golf course, too. Mayor, thank you very much for joining us live here this afternoon.
You're very welcome. Thank you for having me.
That's the Honorable John Cruikshank, the mayor of Rancho Palos Verdes. And right out to the freeways we go now on 790 KBC. Mottek On Money continues now on 790 KBC. Turning now to geopolitics, we're watching the latest developments in the Middle East. Also, tensions flaring in the South China Sea. The Chinese Coast Guard recently rammed a Philippine ship, and they did it while the Philippine ship had a 60 Minutes crew on board. From CBS News, this is following an escalating series of clashes in the South China Sea between the Philippines and China, which could draw the U.S., which has a mutual defense treaty with the Philippines, into the conflict. Yeah, CBS 60 Minutes crew having to get a close look at the situation when traveling on a Philippine Coast Guard ship that was rammed by the Chinese Coast Guard, repeatedly ramming Philippine ships recently, blasting them with water cannon over the past couple of years. Ongoing conversations between Washington and the Philippines about which scenarios could possibly trigger U.S. involvement in that escalating situation. Joining us live now, China expert Gordon Chang, author of The Coming Collapse of China, the Great U.S.-China Tech War, and on X, formerly known as Twitter, at Gordon G. Chang. Gordon Chang, thank you very much for coming to the line. What's your reaction, first of all, to this latest incident, which was captured on video by that 60 Minutes crew recently?
What is really fascinating is not that the Chinese were aggressive, because as you point out, they've been ramming ships and they're doing all sorts of other things, some of which actually constitute acts of war. But they were doing it in front of a TV crew that they had to know was there. So China wanted to send a message, not just to the world, but to the American people, that China was willing to do anything and everything to take over that Philippines feature, which is Sabina Shoal.
On there live with Gordon Chang. At what point do you think the U.S. Would be called in the situation here? And maybe you can explain for us that there's a longstanding treaty, right, between the Philippines and the U.S., in which the U.S. could ultimately potentially be drawn into this.
Yes, we have a 1951 mutual defense treaty with the Philippines, which requires us to respond to any armed attack on the Philippines. And the U.S. has confirmed that an armed attack in those contested features in the South China Sea would bring in the treaty. Now, China claims 85% or so of the South China Sea, and these claims have been invalidated by a permanent court of arbitration in The Hague in a monumental case in 2016, the Philippines versus China. So these Chinese claims are ludicrous, but nonetheless, they're pursuing them very hard. And the United States has warned China publicly. This U.S. State Department under President Biden has 12 times issued written warnings that we're prepared to use force. President Biden himself has issued 3 oral warnings to the same effect, but it doesn't seem to have very much impact on the Chinese political system because they continue to escalate.
On the air live with Gordon Chang, and we got a history lesson recently when a grounded World War II era battleship used to hold down Manila's claim to another disputed area in the South China Sea, the scene of the most violent incident so far, the Sierra Madre. That's the grounded battleship. Tell us about that incident and what happened there.
This is Second Thomas Shoal, which is very close to the Philippines, very far away from China. In 1991, the Philippines grounded this World War II era ship to bolster its claim. And they maintain a garrison of Philippine sailors and Marines on that ship, which they need to constantly resupply. The Chinese have interfered with resupply missions, and this is obviously one of those flashpoints. But the real concern right now is at Sabina Shoal, where the Philippines had anchored for about 5 months a ship to, again, bolster its claims. On Sunday, they withdrew the ship because of the injuries to the personnel on board. And there will be a clash when the Philippines returns a ship to Sabina Shoal, because the Chinese are going to prevent it. And this could be where war starts.
On the air live with Gordon Chang, a China expert. Meanwhile, President Biden has invited the Philippine president to the White House a couple of times in recent months, right? Anything new on that front and on U.S. assurances to the Philippines?
Well, we've been delivering those assurances, as I've mentioned, and President Ferdinand Marcos Jr. has been to the White House. But right now, I think the Philippines are going to be tested, especially at Sabina Shoal, when they try to return a vessel there. And if the Chinese attack that ship, which they undoubtedly will, that means the United States has got a choice. If it doesn't honor its mutual defense treaty, then countries not only in the region but around the world are going to say, what is the value of the word of the U.S.? So our commitment to preserving freedom and democracy and international order will be tested very soon when the Philippines sends a ship out to Sabina.
All right. In the meantime, of course, a lot of attention focused on nervousness between China and Taiwan. Anything new on that front?
Very little. And I think the reason is that the Chinese, they'll huff and they'll puff. They have provocative air and naval exercises around Taiwan, but they realize that as a military target, it would be too difficult. Also, I think Xi Jinping realizes that a war on Taiwan would be extremely unpopular among the Chinese people. And so I think that Xi Jinping, who's in trouble at home, needs a quick win. And that's why we're seeing so many of these provocative events take place near the Philippines, because he thinks of the Philippines as an easy target. And I guess he does not believe in the American defense commitment to Manila. So deterrence is broken down. And of course, Frank, nothing ever good happens when an aggressor believes that deterrence has failed.
Gordon Chang, China expert, authored The Coming Collapse of China, the Great U.S.-China Tech War, and on X, formerly known as Twitter, at Gordon G. Chang. Gordon Chang, thank you very much for that thorough update and assessment of things here, live on Mottek On Money on 790 KABC. Stay tuned now for the 790 KABC News Blitz with Randy Wang, and I'll be back with more at 4 tomorrow afternoon here on Mottek On Money, 790 KABC.
The Rolling Stone Music Now podcast gets inside the biggest stories with Rolling Stone senior writer Brian Hyatt, movie director James Mangold.
I want to turn Bob Dylan into a simple character with a simple thing to unlock that then makes you go, now I get him. First time I sat down with him, he said, what's this movie about, Jim? It's about a guy who's choked to death in Minnesota and reinvents himself in a brand new place, becomes phenomenally successful, starts to choke to death again, and runs away. And he smiled. He was like, I like that.
Rolling Stone Music Now, wherever you listen.